Welcome to Ajay Explain Money. Today's market was one of the persistence, but not the kind investor love. For the fifth consecutive session, Indian equity ended in the red, the longest losing streak since mid-July. The mood on the Dalal Street was heavy, as concerns over the US H-1B visa rules, foreign fund outflows and the global uncertainty kept the bear firmly in charge. By the end of the day, Sensex slipped by 0.68%, while Nifty dropped by 0.66%, and the FIA pulled out more than 2,400 crores. The rupee weakened and even the gold lost a shine as price fell on the profit booking. Next we look into the positive impact for today. Even on a days like this, there were still a few bright spots. The metal sector turned out to be the lone warrior, ending the day up by 0.22%. Hindustan Copper surged more than 6%, while Hindalco and Tata Steel managed to hold the ground. In banking and telecom, the story was steadier. Axis rose nearly 0.7% on the credit growth hopes, and Bharati Airtel inched up by 0.23%. Thanks to the subscriber growth, the defense sector too was buzzing. Bharat Electronic gained almost 2% on the continued momentum. Some niche technology names even stood tall when the IT gains stumbled. TVS Electronics surged on restructuring news, and a few mid-cap IT companies resisted the overall sector weakness. And chemicals, they were the real star. Fineotex Chemical climbed by 5.67% ahead of the bonus issue. Chemcon specialty shot up over by 12% on the strong outlook, and Match India jumped 11% on the restructuring announcement. Next we will go into the negative news and its impact. The broader market, the pain was widespread. Real estate index fell by 1.65% for the second straight day. DLF, Godrej and Prestige were all under heavy selling pressure, with worries about inventory and rising interest rate dragging the sentiment lower. Auto sector also lost the steam, down by 0.92%. Tata Motors slipped nearly 3% as the JLR extended its factory shutdown, while M&M fell 1.2% on the weak rural demand. Inventory buildup and margin worries weighted on this sector. The IT sector faced the sharpest blow, down by 1.27%, with US hiking H-1B visa fee to $1 lakh per application. Costs could skyrocket for the Indian IT companies. TCS dropped by 1.8% and Infosys fell by 2.1%, reflecting these growing concern. Even consumer names were hit. Trent slid almost 4%, Asian Paint lost 1%, and the Titan dropped about by 1.1% as discretionary demand showed a sigh of slowing. Next we will look into the macroeconomy. Globally, the picture wasn't much better. In the US, Dow Jones declined by 0.37% for the second day as a tech stocks saw a profit booking. Japan, however, showed resilience. The Nike gained by 0.27%, supported by the weak yen helping the exporter. Hong Kong remained subdued with the Hang Seng edging 0.13%, while the Europe traded cautiously with the FTSE down by 0.06% and the DAX slipping by 0.23% on the manufacturing worries. Next we will look into the key catalyst ahead. So what lies ahead are? The big event is the RBI monetary policy meeting starting on September 29th. With the inflation under control, markets are hoping for a smaller rate cut, maybe 25 basis points, that could lift banking stocks and the overall sentiment. Then come the earnings session. TCS will kick things off on October 9, followed by Infosys, HCL and HDFC Bank. These results will set the tone for IT and banking sector. Globally, US inflation and GDP will guide the Fed's next move, and closer to the home, the outcome of India-US trade talk could prove critical for easing a visa concern that are now haunting IT companies. At last, I like to close the video with the 3 big takeaway and the risk ahead. First, we will look into the 3 key takeaway. The first one is the market is being tested. 5 straight day of selling shows a weakness but also create a possible opportunities. Second, the sector rotation is clear. Metal and chemicals found a strength while IT and reality bore the brunt. And third, the policy cues from RBI and earning season may will decide the direction for October. And the key risk which remain are from FA outflow and visa rules to global growth concern and rupee stability. But within every challenge lies opportunity. In times of uncertainty, the market rewards patience. What feel like weakness today may well be the setup for tomorrow's opportunity. If you found this video helpful, smash that like button and share it with a fellow investor, and don't forget to subscribe. I am always open to the feedback. Please provide your valuable feedback in the comments. Thank you.